So I'll go ahead with this. Um, okay, so it's good to be here. Like a lot of my teammates in Sensibull are in uh, ISB. Uh, I heard about ISB uh, probably around a couple of years back, sometime during the time of Corona. My flatmate and who is also my teammate is a lurker among you. So that's how I know about it. So I think yeah, they are lurkers. They're all lurkers. Somebody is saying Sensibull is full of digits. Yes, Sensibull is full of digits. The entire company has a gambling problem. Uh, so, so yeah. So it's good to be here. I've always heard about it. So when Pranay, when Energizer and Co. Contacted me, to do this thing, I jumped on, and here we are. So I think the first question people wanted to know is how did I end up here, right? So here's the truth, right? I never wanted to do trading, right? Because when I was in undergrad, the only thing I really liked was quizzing. I used to quiz pretty actively in Indian quizzing circuits back in the day. So I thought I'll just take up an IT job in Bangalore and chill and quiz and chill and all that. But then coincidentally, in the final year of college, I ended up writing that, and I had an A convert. So I ended up going there. So at the end of it, also I thought, so I interned in an investment bank, and I realized that investment banking is a pretty glorified version of a job where for the first 3 years, uh, kids make Excel sheets, prepare PPTs, and read red herring prospectuses, right? So, so I think somebody saying again same story. Everybody knows. So anyway, I wanted to end up doing this IT quizzing and all. It did not happen. I ended up uh, taking a few trading interviews, and for some reason, they thought, okay, let's try putting him in trading. And so, my first job out of college, my first ever job turned out to be a trading job, and I was not very enthusiastic about it back then. But I think after the first few days of trading, I think I got the dopamine hit, and here we are. Right, this is how we ended up here. Uh, so the trading journey is fairly simple. For the first 3-4 years, I was never trading for myself. In fact, till 2015, I never even bought a stock because I had restrictions on whether I could trade or not. So first year I was trading bonds for a subsidiary of Reserve Bank of India. I used to trade the Indian 10-year bonds. Then I used to trade exotic options and plain vanilla options also for ICICI for their FX desk. It was very cool because this was the only desk in India which used to do exotic options. We were not even technically in Indian soil, so that was fun. But then after a really long time, I realized that there's no point in trading non-Indian currency in India because career moves are difficult. So I ended up going to IIFL to trade USDINR vols. I was just trading volatility for a year, and then that was like a pretty tough year for all USDINR traders. I think my desk, which was a size of 44, got reduced to 8, and I was like the eighth person among the 8 people who left the job, and then Sensibull, long story, etc., etc. So that was the story, right? But I think the story is not of much value to people. So I'll take questions which are of value to people. Let me just look at the AMA questions. So okay. So one interesting question somebody asked, and that's a very interesting question because somebody asked was um, you know Shameless Steel is asking, is trading just running on the hamster wheel? Do you regret leaving full-time trading to start this? It's an epic question, actually. So this is what happened, right? So I still remember this was 2012, October 3rd or 4th, I think. On 2nd, it was Gandhi Jayanti, and this was a very tough time in my life in trading in the sense because USDINR was very volatile. This is the time when USDINR went from 44ish to, let's say, around 60 plus, right? A lot of people were getting fired from my desk. There were 44 people in my team. In the end, towards October, there were eight of us left, right? So I went to my then boss, Pankaj, and asked Pankaj, ki, yaar, uh, kare kya, right? So, so um, he told me, dude, here's the deal, right? You're very young. If you can run away from this profession, right? And his idea was simple. Dude, at the end of the day, this is like playing a sport. Think of yourself as a batsman or something. Of course, you play a different opponent, different pitch, different geography every year. But at the end of the day, you're just a batter trying to hit a ball. Sometimes it might be an in swinger, sometimes it might be an out swinger. But at the end of the day, somebody is throwing balls at you, and you're deciding whether to leave it or hit it, or how to be aggressive or defensive, etc. Trading is exactly like that, right? At the end of the day, it's very fancy. There's a lot of adrenaline. There's a lot of dopamine involved in it. But at the end of the day, you're exactly like that cricketer who's deciding, should I be playing this shot? Should I be leaving this? Should I be aggressive, defensive? Sometimes it might be from a spinner in Australia. Sometimes it could be a fast bowler in South Africa, but it doesn't matter. It's a ball. You're deciding whether to play it or not. And if you take trading as a career choice, you'll never be building things. You'll never be in leadership roles. You'll never be mentoring people. You're just I was reading Andre Agassi's autobiography at that time, and he says, right, tennis is the loneliest sport ever. So if you ask me, trading is among the loneliest professions I've seen, right? Because I've worked in trading, I've done a little bit of sales, I've done product management, I've been the COO of a company, and now I'm running this. And I know for a fact that trading is pretty much the loneliest profession out there. There's no camaraderie. I mean, there is of course camaraderie, but you know, there's no uh, teamwork as such. There is no, how do you say, building something. At the end of the day, it's a few banks and bankers and etc. sitting and playing cards, right? Sometimes somebody wins, sometimes the other guy wins. At the end of the day, tourists come. Think about it like a Goa casino, right? There are regulars who play. Sometimes someone wins, sometimes the other loses. In the long run, they make money because tourists come to Goa to play cards and they lose, which is exactly what happens with retail who come once in a while and bust out. This is the reality of trading, right? So he said, dude, listen, if you think you want other things about your life to come out, there are other aspects to your personality, leave this thing and go build something, right? And this was 2013, and then I thought, oh my God, he's right. So to answer your question, uh, yes, I think trading is a lot like hamster wheel. I don't regret leaving it because technically I haven't left it. I trade for fun every now and then, almost every day. I don't know if it's trading for fun or a gambling problem, but here I am. So yeah, I am happy that I'm doing this rather than trading because I think it's a very lonely, very unidimensional, once a trader, always a trader profession. It was, I mean, I could do that for the rest of my life, but I realized that there are other things I could do which would be more fun, which is why Sensibull, right? But on the plus side, right, trading has other things because if you are think about it this way, right? There are professional poker players. I have considered doing that 8 years back when I, was generally wondering what to do with my life. Uh, if you can sustain that lifestyle, right? Like being a professional poker player or a cricketer or an F1 driver, hopping across cities every 2 weeks, etc. Yes, for sure. Why not, right? It gives you freedom. It gives you the ability to not be answerable to anyone except your P&L. You can take it off when you want. You can work when you want. You can be in Maldives trading, taking a picture and putting it on Twitter one day, or you could be at your home trading the other day, right? So there are good things about it. Um, but uh, but yeah, it's what it is, right? So I don't regret it. If you are thinking of trading as a full-time profession, you should be very well aware that it's like being a cricketer walking into the same pitch every day in, day out for the next 10 odd years of your life, because I'm guessing that that's at least how much time it will take for you to make a reasonably sized fortune to get out. uh, let me see the other question. I'm on
Abid, another question that loads of people asked had was, uh, which style of trading do you prefer? Is there any preference? Do you think there's a difference between day trading, swing trading? Apart from the time constraints, is there something that you would say for a guy with a full time job, he should do something particular, like swing trading, as compared to day trading or something of that sort? Apart from the time constraints.
I'm glad you asked that question. So I'll just one second. So here's the thing, right? So I'll just tell you what has worked for me, right? See, I've never been a full-time trader except inside the bank or prop trading desk or something which I was working in. But that's very different, right? Because you're trading with somebody else's money. I mean, what do you call a trader who gets fired from bank A? You call that person bank B's trader, right? So the stakes are much higher. much slower. It's not your money. Even if you get fired, some other bank will hire you, etc. So the trading style at that point of time is very irrelevant. I'll talk about what happened to me after that. So after I left trading now, I was trading with personal capital for some time, mostly for fun, mostly because I wanted to get better at it. But the thing I realized, right? I mean, and in my initial times was horrible, right? If you see the first 3 years of my P&L, you'll probably never get the Sensibull subscription. But I'll tell you what I do, which kind of works for me. I mean, kind of which so the thing is this, right? I can't be trading all the time. I can't be looking at my P&L more than maybe let's say once a day or twice a day. I cannot be glued to my screen because that's not sensible. And I'm guessing that most of you have a day job, right? And I'm guessing that not everybody can become a full-time trader. Now, with the constraint that you have a day job, what is really worrying for me when people with day jobs focus on trading full-time is that, see, if you double down on your work and focus more on it, the guaranteed growth curve you will get in your organization. Let's say you're a developer, right? If you spend a couple of extra hours or do something spectacular, or you know, do a side project, or even spend a couple of hours a day and build an app which later becomes a product or gets bought out by somebody, the convexity of the payoff that comes from that kind of an event is humongous, right? And let's face it, the expected value of your money from trading is fairly low. Now, if you put in all these constraints, my constraint is that I want to trade on the side for fun without focusing on it at all. This is my problem statement, right? This is my problem statement. And I'll say ki, I don't want too much money. So everybody says that, you have to have at least greater than FD return to be successful. I mean, to make sense. Yes, I agree. So there's an easy way to solve that problem. Don't trade with cash. Buy G6 or G-Sec mutual funds with your cash and then pledge it. Now your margin is already beating FD return, right? So even if you make 1% from your trading, you've already beaten FD and you've had fun. So basically, I have zero money in my trading account. Everything is G-Sec, right? And G-Sec I have pledged in Zerova, and that's my trading capital. So even if I make, let's say, a little bit of anything a year, I'm like, chalo, ho gaya, the good fun. And so this is my way I look at it, right? And I'm just looking at it as, okay, some side income, some fun, probably an outlet for midlife crisis. Some people buy Harley Davidson, some people have children. I decide to trade. But so so if this is your problem statement, that you want to have some side income, some fun, and there's nothing wrong with having fun, right? It's as long as you're admitting to yourself, boss, I want to have fun, this is my problem statement, it's completely fine. So if these constraints are in place, then I'll just tell you what are the things which really matter. The number one point of the trading style is that you cannot be a strictly option buyer bar day trader bar scalper bar short term trader, right? Because it requires intense bursts of short term focus. You have to necessarily be in a trading style where the longer you stay in a trade, the better it is for you, right? So what works for me with these constraints is that one, I have a tendency to sell long-term options and sit on it, because in the long run, statistically, the theta plays out in your direction if your long-term, objective is right. So, for example, for those of you who are following our YouTube, somewhere around 18,500 last year, just before Ukraine, I had shorted 19,000, 19,500, 18,500, and all that calls, and I exited all of that somewhere around 16,200. It was a very nice trade, but it required no focus from me, right? I just shorted them around 1100 odd levels on price and covered them around 300, 350. And for 2 months, it was the same trade running, which means I don't have to look at the market. I don't have to see if there's a fluctuation, nothing, right? You're just saying that, okay, I have a trade whose break even is 1000 points from wherever the current Nifty level is. So even if Nifty is up or down 50, 100 points tomorrow, I hardly care. And in 2 months, if Nifty is at the same level, I'm back to some theta earning. So this kind of trade helps me. The other thing which I of course do is I swing trade with spreads which have at least 7 days plus in expiry. Again, my logic is simple. So if I'm buying options for extremely short terms, then I have to monitor my position because I have extremely high gamma, delta, etc. Right? So what I do is I take a spread, let's say 14 days to expiry, and sit on it. The good thing about this is that, see, first of all, I mean, you're taking a slightly directional call. with no need for strictly managing. I'm just saying that, boss, this is my bet. If this bet is right, I make this much. If this is wrong, I lose this much. And I mean, that's what it is. I don't want to actively manage anything. The second thing, of course, which it's more psychological. See, once you trade a spread, it's not like a Nifty moves hither or and your P&L will swing a lot. So my P&L doesn't swing a lot because I'm taking very low delta, low gamma spreads. So if hypothetically, if I were to check every hour and my P&L is hardly fluctuating, I'll be like, chodi yaar, rehne do. So it again helps me focus on things which matter to me, my like work and all. So basically, to answer your question, my trading style is longer term horizon trades, mostly for OTM, very long expiry, 6 months, 1 year type of sells. The second thing I do is 14-day plus spreads. Right. So this, I mean, the logic is very simple. I don't want to focus on trading. The second thing, of course, is one reason why I do spreads is if I know that I won't lose more than X, then once you've made peace with your max loss, you hardly care, right? So I mean, you can again focus on your work, spend time with family, etc., etc. So my only constraint is that I need time on my side. So I'll take longer term expiry. I won't try to see predicting the market itself is very difficult. Getting the direction and timing right is even more difficult. So I tend to do trades which allow me more in terms of time, trades which don't require my focus because they don't swing much, trades that have time in its advantage so that I have 2 weeks or 3 weeks to get it right. And the other thing is, of course, ridiculously long term, very high break even kind of trades. But then that requires a little bit of uh, market outlook, because if you had sold 80,500 calls last year and if it went to 20,000, it wouldn't end well, right? But largely this is my trading style. I think there was a third question. I'll just 1 second.
There are multiple questions. One of them which keeps popping up. Okay, there are two of them which keep popping up again and again. The first is everybody wants to know about your personal biggest trade win or biggest trade loss, whichever one you want to talk about.
Yeah.
And the second question is market movers. What data points are the big institutions looking at before they enter an FNO trade? So these two questions, one personal, the second one about market movers.
Okay. So I'll answer the personal question first, because I think I have already answered to that. So sorry, could you repeat the question? The first question, what was the biggest
your biggest trading win or your biggest trading loss?
Okay. So my biggest trading win I'll talk about both myself and the company I work with. So my biggest trading win for a company I have worked with was I think somewhere in June of 2012, I bought quarter paisa, half paisa, and 1 paisa USDINR options with 3 days left to expiry for roughly 16L. This is 2012, so 16L was a lot of money. And I entirely blew up that 16L on, I don't mean 25 paisa options, I mean quarter paisa options, right? 0.0025, 0.0050, and 0.01. And this was 2 days before a Fed policy. The entire market was expecting that Fed policy will be neutral, and therefore market will not tank. Like nobody expected a possibility that Fed outlook could be very hawkish, and therefore there could be a risk off, right? So everybody expected dollar will stay where it is. I think on the day I picked up all these options, dollar was trading at 55.60 or something, and next day it gapped up 70 paisa and went to 56.30. So my 16 lakh became roughly 2.2 crores the next day. I got a lot of fire from my head of trading for this. So interestingly, this is why I got fired from my job, because I was not supposed to take this trade, but you don't exactly think in terms of risk management and all when you're 26. So this was the best win, and kind of in a way, another colleague used to remark about this event. He used to say कि यार इतना risk लो कि पैसे छप जाए, but इतना risk ना लो कि job चली जाए. So in my case, it turned out the other way. That was the biggest win for a company. The biggest win personally, see, personally, I've never traded with that much money, right? Because when I was trading before 2017, I hardly had any money, and after Sensible, I hardly started taking big trades, right? My margin is around 25-30 L, but I don't trade for more than 50 L. 15 L. I don't deploy more than 15 L in margin at any point. Mostly because I don't want to get tensed about it. But the biggest personal win, I would say that I was short from 18,500 till around 16,000 at the time of this Ukraine crisis. I think that was the single biggest move I ever captured in the market. Biggest loss, it's a famous story. I was short SBI futures one day before Arun Jaitley announced recap. No, but I'll narrate that incident because there's a lesson in it, right? So this is the stupid stuff that I did. So this was October 24th, 2017, I think. Yeah, I'm pretty sure about the date. Can't forget this. So October 24th, 2017, I had some futures short in SBI, and uh, I think the trade went before that. I shorted SBI somewhere around 250 before Diwali, and then there was Diwali that weekend. Stock came to 248. Pretty happy. I should have cashed out then. I did not. I held the trade again. Now on Monday the stock started moving up, and on the next day or something on 24th there was a news saying that Finmin is going to make an announcement after 3:30 this market. Now the problem of course is FBN rallied around 2%, 3% on that afternoon after this news came out, right? I should have just exited the trade saying that, boss, if you don't know what is going to happen, and I didn't understand what was happening, right? I should have just exited saying, ki, boss, I don't understand what is happening. I should have just exited. But instead of that, I held the trade thinking that, this 3% rally is already factoring in whatever, finance minister is going to announce. That was Jetli then. And I thought, okay, everything is factored in. I hold the trade tomorrow, say everything will come down, right? I had no freaking clue what is happening in the market, but I held on to the trade for two reasons. One is, of course, the trade was initially winning, so I got attached to the winning side, and I saw a good P&L number. I was like, यार अब वही P&L पे निकालेंगे जो P&L max दिख रहा था उस टाइम. So I got attached to that anchor, tried to go back to that high, but it did not happen. The worst thing, of course, is that next morning SBI gapped up and gapped up, right? Gapped up from 255 to 270 odd levels. But in that gap, it hit the upper circuit. Nobody could trade uh, because the circuit hit, right? And then there was a second circuit. So I finally exited the trade close to 300. I had shorted at 255. So that's like 45 points, almost 20-25% on a stock in futures. That didn't go very well. So that was the personal mistake. But I think the lesson in there is that, see, I mean, of course, this story has no value to it unless I tell the lesson. I think the lesson is that, see, if there's an event which you don't understand, probably you should not be taking a position on that event. Gambling on events is absolutely stupid, which I did. I should have closed out thinking that, okay, today there's an announcement. Who am I to decide that यार ये जो announcement है वो factor in हो गया 3% is the right number? I mean that's stupid, right? I have no idea what is the announcement even, and I decided that this is factored in, right? So I mean, the lesson in there for everybody who is watching it is that don't gamble with events, don't take pangas with government announcements. If you don't understand a trade, just get out. You will get another trade. So that was my single biggest loss. I don't think there was a huge loss. One remarkable loss which I can talk about in my institutional trading, because they always had risk management measures. So if any loss became even slightly big, we used to get out. So second question: what do people who are large order takers? So here's the honest answer, right? So I don't think I'm qualified to comment on this simply because I haven't been in a really large setup. Two parts to the question. So see, if you ask me, at the end of the day, the biggest trading flows I've seen are RBIs and ICICIs and IIFLs, right? Now they're not Goldman's and Merrill Lynch's and Morgan Stanley's, right? So I don't know what they do, right? And I believe they are the real guys who really move the market. So that's part one. But I can pretty much guarantee you that inside Indian prop trading firms, they don't have a magic formula. Indian non-algo discretionary prop trading firms, they are just looking at price action candles and open interest data, etc. Some people are also taking macroeconomic views, which is bonkers if you ask me, because I don't know how anybody can take a macroeconomic view and trade when you're trading like a 7 DTE option. Um, the other thing which I know, which of course I can't prove, is that see, it's easier to make money inside a uh, large trading company ka floor, right? I'm not even talking about HFTs. HFTs, of course, don't do anything directional. They're just doing that entire probabilistic order filling based on market microstructure, which I'll just sideline the topic because it's rather large. But see, think about it this way, right? Let's say that you are XYZ Bank who is running a prop desk out of Hong Kong, right? But you do realize that you also have a flow desk, and you also realize that a large pension fund or a hedge fund or a sovereign fund would route their orders through this prop desk ka flow desk, right? Now, technically, the flow desk should not tell the prop desk that there is going to be 500 crore worth of purchase in ICICI Bank shares today. But because a lot of my classmates, etc., work in these flow desks and prop desks, I know for a fact that they get to know. So if you're inside a large bank, you really don't have to do a lot of intelligent work and make money because you always know the flow information. You know which hedge fund is going to place which order in which security. I mean, it's technically it's not right. It's called front running, but a lot of these large entities do have a large front run. I mean, everybody knows about it. If you go to Wall Street Bets or any of these forums, people openly talk about front running. But I have noticed that. See, my point is this, right? If I can make risk-free money using all this, why should I put a lot of money to do analysis and make money? The other thing, of course, is the large order players. Those who are honest also look at vol skew quite a bit. I've seen my classmates who are traders in XYZ companies look at vol skew and risk reversal a lot to determine the market direction. The third thing, of course, is in a lot of large banks, your economic desks give you the mandate of whether you should be trading this direction or that direction. And I'm guessing that they know which direction, and I don't want to guess how they know. So I'm guessing it's a combination of, some people do honest work in terms of looking at skew data, all that. But larger companies have unfair advantages, like they understand the flow information, and probably their economic desks know what is supposed to happen. So I hope that answers that.
Yeah, thank you. Another question that we have is people keep saying that all retail traders do is just buy options. But has there been any change recently in this regard, especially given the fact that premiums nowadays for current and next weekly expiries are shrinking rapidly nowadays? Do you think there's been a trend where retail traders are now more focused on option selling, or are they still just buying and gambling? Most of them.
So the last time I checked, see, 11 out of 12 orders are buy orders. They are not sell orders, right? And that has not changed largely. So to answer your question, people are still yellowing. I don't think they are selling. Of course, there are more sellers emerging. There are larger volume players who are becoming sellers. But regardless of what the speak is, if you look at data, retail is still largely buyers. If you take 12 people, 11 out of them are still buying. And that to OTM. And that to mostly calls.
Okay, so that's just straight up gambling then. We'll move on. This is a question about Sensible directly. Recently, when it comes to the British pound, the Japanese yen, or the euro, volumes have been picking up rapidly. Is Sensible going to have any updates to include all of these as well, apart from just USDINR?
So if volumes pick up, we'll definitely do it. We have a threshold number internally saying this many unique users in each of our brokers. I mean, at least in Zerodha, if X% of the users or X number of clients start trading this thing options, we introduce it. So our decision to introduce a currency or index or not is primarily influenced by the number of trading. So we don't have anything ideological against introducing other currencies. It's just a matter of liquidity. If there's enough, we'll definitely add it.
Okay, awesome. Another question, which is just popping up all the time, is how do you get to a point where you're employed by a trading desk? What skill sets are we looking for? Is there a certain type of exam, or how exactly did you get your role, for example?
So, okay. So so this whatever I'm going to say is largely 10-year-old data because I went to a B school probably 15 years back. My God, it's been a while. So, but largely the answer to the question is this, right? The investment banks, basically all the Firang banks, right? Goldman's and Morgan Stanley's and Merrill Lynch's and Deutsche's and all that, they all, I mean, the bummer news is that they have an overwhelming tendency to pick up freshers from top tier schools, right? That's channel number one. Channel number two is if you're which this is mostly uh, discretionary traders, economics based traders, quant based traders, etc. So either you can be picked up as a fresher or a person with 1 or 2 year experience into an investment bank's trading floor. And if investment bank's trading floor is what you are going to aim at, then it is largely a function of how strong your math is, right? They just interview you purely on math. They ask you all sorts of questions on Greeks and whatnot. I think the last time I interviewed with an investment bank, Barclays London, they asked me to derive Black-Scholes. I don't know what's the relevance of that in trading. That's what they actually asked me to do. And they ask all sorts of stuff, right? They basically ask you uh, corner case conditions for when implied volatility versus realized volatility relationship breaks and all that nonsense. But they're basically trying to see how strong you are mathematically, because at the end of the day, an investment bank's portfolio is not exactly like I have a call spread or put spread. It's always expressed in terms of I have a $30 million delta portfolio with a $17 million Vega that has a theta of roughly this much per day, right? So it's always a so in fact, the investment bank's portfolio is a curve where you've highlighted your gamma profiles and you're looking at it. And I mean, we used to do some of this fancy stuff at ICICI primarily because it was non-INR exotics. But it really matters how well you understand your math, not purely because of the fact that you have, I mean, of course, market direction has nothing to do with your marketability. But in interbank trading, unlike NSE, where you can see a fair bid or offer on the screen, when you pick up a phone and dial, let's say, a Standard Chartered and ask them for a 10-year rate on a USD interest rate swap, you need to know how to price that swap because this is not a transparent market with an exchange telling you what's a fair price. Right? So to get into an investment bank, if you have a very strong quantitative background, either MBA or CA, type, that's channel number one. Channel number two, which is much more lucrative these days, is if you're a extremely ace programmer. I mean, again, ideally from a top tier, IITs or something, then you can become a HFT boy, right? I mean, HFT boys are very well paying. I mean, I know so many people who makes north of 3-4 CR a year in bonuses who are yet to hit the age of 26, 27. Crazy, but they make so much every year. So if you want to get into trading, but which is not discretionary, quantitative or directional, your best shot, of course, is to get into an HFT desk. But in HFT desk, what really matters is your programming ability, your backtesting ability, how well you can write code. It's not basically a game of who can guess the direction better. It's basically a game of infra where who has the fastest, low latency execution infra setup, right? So that is the second path, right? You are an exceptionally good programmer. So path number one, extremely good quant. Path number two, exceptionally good programmer. The third, of course, is a very desi way. I mean, so if you have been trading for a while, if you have a decent P&L built up, it is still possible that you can go walk into one of these very Indian broking desks in Bombay and say, boss, dekho, this is my P&L for the last 3 years. Why don't you just let me take a shot at trading? And the good thing about, all these Indian trading desks, unlike the Firang banks, where judgment is extremely important and you're playing with millions of dollars, what Indian trading companies typically do is they'll give you like a 20 lakh, 30 lakh kind of a limit and say, boss, trade kar lo. Right? If you go well, we'll retain you. If you don't do well, we'll fire you. That's another option. The fourth option, of course, is again, there are these random brokerages and trading shops based in Bombay who you can go and say, boss, I want to trade 50-50. Basically, profit hua, we'll split 50-50, loss hua, I'll take 50% of the loss. These guys also give you a shot if you want to get into trading, right? But the problem, of course, is that it's not what do you say, the sophisticated, investment bank trading kind of a role where there's a very great career path, right? But if you really want to get into trading, you can of course walk into a desi brokerage in Bombay, tell them that boss I want to trade, then trade slightly higher stakes there, work your way up. Next, go to an Indian proper tier A brokerage and ask for a shot at their prop desk. Then probably go into a bank. Eventually, maybe in another 10, 15 years, if you do really well, you can get into a very fancy foreign bank kind of role. But this is a very long and winding role and kind of tough, right? But the easiest ways to do, if you plan for it in advance, is basically, again, I mean, it's not easy, but the top tier school, B school, or an engineering college, and then try to get it as a fresher. But the statistical odds of that is fairly rare because in my batch in college, probably there were less than, I mean, 10 people who got proper trading roles, right? So, yeah, I mean,
Yeah, that makes sense. Yeah, I think you've covered this topic extensively. Another question for Sensible.
yeah.
Are you guys planning on integrating more brokers like Finnovatia, Dhan, etc. with the Sensible platform?
So here's the problem, right? Um, the truth is, I don't know how to put it delicately, but if a broker is not on Sensible right now, it's not because of inaction at our end. It's probably because the tech teams in most brokers are astonishingly slow, right? In the sense that, see, I'll give you an example, right? ICICI is the only bank broker in Sensible, right? The other three big banks, um, they probably they have definitely initiated discussion with us for integration in 2018. But nobody has developed a stable API for a third-party integration. And it's crazy, right? It's been 5 years. So, so we kind of give up on them saying कि बस छोड़ दो अब नहीं होगा. Even otherwise, when we talk to other brokers, right, we are now going to a mode where we realize that okay, all the serious traders are on either a Zerodha or an Angel or an Upstocks, and it's very difficult to find people outside the system in the minimum critical mass. So when we talk to a broker, we say that, "Hey, dude, listen, here's the deal, we'll integrate, but can you give us a minimum guarantee of, let's say, 3,000 paid users? In the sense that if you have 3,000 paid users, we won't charge you anything. But if you are only able to give us 2,500 paid users, which is a tiny ask given that Zerodha alone is like 12, 13 times the size of that number, we tell them, okay, if you have 3,000 paid users, we'll give it to you for free. If you only have 2,500, just give us the deficit 500, differential, which is hardly like what, 500 into, more, something like 4 lakhs a month or something, right? But the truth is, it's really, brokers don't commit to even that kind of money. And the irony is, this is the same kind of broker who gives like a YouTuber 12 lakhs for a 30-second video. So I think the client centricity among brokers to provide a platform that gives a user's value is pretty low if it involves expense from. I mean, it's really crazy. The short-sightedness towards expenses, which is embedded in the Indian broking system, which I've seen is at another level. So the truth is, we don't have a problem with integrating with brokers. It's just that they are either unwilling to spend the deficit of roughly 5 L a month, or they don't have APIs. And there's another reason, of course, which is that the Indian broking is extremely long tail in the sense that top 7 brokers or 8 brokers roughly have 70% of F&O volumes. And if you take the next broker outside the top 7, they individually have less than 1% of India's F&O volume, right? Now, for us, it doesn't make sense to do a 3-month integration to capture what could be at most a 1%. So we stick to the top 10. So that's one more reason why we are not outside this number.
Okay, that's loads of reason. Another sensible related question from the Lama. A big fan of the live options charts feature.
Yeah.
He's a big fan of the live option charts feature. Any new improvements that we can expect in that in future? That's his first question. Any new improvements? And his second question is, any data on how many people actually use the live option charts feature to actually trade? So 2 questions.
Okay. So the second question, if I say any numbers, Balaji will murder me, so I'll stay away from that. Balaji is my co-founder, and he looks at all the analytics, back end wiring and everything. But the first question's answer, I'll tell you the answer. Um, so I don't think we have ever announced it anywhere else. I don't think we have ever announced it on Twitter. But the big update is that all of our charts are going to go into TradingView. We are developing our own. I mean, we have already finished a lot of TradingView integration, which basically means that every chart which we have right now, whether it is the chart of an option, a chart of an underlying, or an intraday chart which shows PCR, etc., or a chart which is the multi-strategy chart, etc., all of them will have a TradingView version also. So the biggest update which is going to happen to all the intraday charts is that now you can see them in TradingView. Basically, we pump the data, but the interface is TradingView, and you can do studies and annotations and all that jazz. I mean, I think that update is so mega crazy that I don't think I should add another smaller update to this list and come off this high. So I'll stop here. Yeah.
Yeah, just looking at more questions here. Do you have any preferred markets or assets that you like to trade? Also, there's this growing notion that trading in the US markets might just be easier. And now that we have more avenues to trade those markets too, do you think that's an avenue that you consider the US markets are safer, better regulated, or you still think it's best to stick to India? And any particular asset, like do you just trade Nifty, Bank Nifty? Do you have a few certain stocks that you've been studying for a while and you just trade those, or based on opportunity जो भी हो गया आज अदानी के साथ कुछ हुआ तो आज अदानी ट्रेड कर लिया कल कुछ और ट्रेड कर लिया?
Yeah. So the answer to that is, see, I only trade Nifty, mostly trade Nifty. 90-95% of my trade is Nifty, which is kind of ironic because till 2015 I was not even allowed to trade Nifty. But after I quit and all that, I've been in Nifty. But I mean, after my trading goals, I have been in Nifty. But till then, I was only trading currencies and interest rates. But now, if you ask me, by far my favorite asset class is Nifty for multiple reasons, right? So I don't trade single stocks. So my trading style is that I want multiple frames of reference to make a decision on whether I want to be long or short, right? In the sense that, if you watch my YouTube every evening, and this is the analysis I do for myself, which I also share every day. See, I want to have multiple sources of data to confirm whatever is my worldview. Of course, there is a macroeconomic layer which is pervading all of this. But after that layer is over, the second layer is charts, right? This, regardless of what the world says about technical analysis, I think candlestick chart has a lot of value. So I'm not talking about RSI and Arun oscillator and super trend and all, but I think basic candlesticks, if you combine it with volume, has a lot of potential to unlock and give you the sense of market, because ultimately it's supply demand analysis, right? So I do it a lot. And the second thing I look at, of course, is open interest. The third thing I look at it is FII data, right? And this is the same thing which I put in Sensibull. It's the same thing I use. In a way, I developed it for myself, and somehow these features took off. But the reason is, see, in stocks, the problem is it does not have the kind of unriggability which Nifty has. It's really, really difficult to rig Nifty, right? In the sense that, you need to be the government to rig Nifty. Whereas stocks, the problem is the smaller the stock, the more riggable it is. Free float is minimal. Operators can come in and play a way. Promoters, I mean, how transparent do you, or how much integrity do you think exists in our system? If most of the free float is significantly smaller than the promoters holding, anybody can operate a stock, right? So I don't want to play like a casino which is rigged against me. So basically, I can't really go into stocks because of this reason. The second reason, of course, is that my second data point, which is open interest, the volume of, or the volume in options in single stocks, right? All these stocks is very low compared to the volume in their futures and underlying, which pretty much goes to say that looking at an open interest chart of a stock is useless, because see, the majority of the action is happening anyway in the stock and future, right? The open interest chart goes wrong all the time. How many times have I personally looked at a stock, let's say even as big as Reliance, and figured out, dude, this is totally worthless. The OI does not work in these stocks. The entire thing is run by the volume or underlying and future. So that rules out stock for me. But in Nifty, because majority of the volumes happen in options, the open interest and the option chain is extremely reliable. I mean, yeah, of course, once in a while it goes wrong, but 8 out of 10 times you can trust the open interest which you're seeing in Nifty and trade it, right? Again, Bank Nifty has open interest, but it's not as reliable as Nifty. Um, Third, FIDI data. You don't have FIDI data for each stock, right? Even if it is very insignificant. Whereas you have a very large FIDI data when it comes to Nifty. You have the open interest on options, you have the open interest in futures, you have the stock data. So basically, if I look at Nifty, I get the chart, which is very reliable. I get the volume, which is very reliable. I get open interest, which is very reliable. I get FII's stock data, I mean FII's cash data, futures data, and option data, which is very reliable. All of which give me multiple frames of reference to trade, right? So therefore, I stick majority to Nifty. I think even Bank Nifty is not very reliable because let's face it, right? Ultimately, Bank Nifty is 75% for stocks which are extremely correlated with each other. Basically, Bank Nifty is just HDFC Twins, ICICI, and Axis, right? So if you combine all of if four stocks is 70% of a index's weightage, and all four of them are very highly correlated, then you can't call it a diversified index, right? You might as well trade HDFC Twins or HDFC Bank alone. And the problem with that is even HDFC and HDFC Bank are very correlated. So therefore, I don't think Bank Nifty is a very diversified index which allows you to trade it like an index. And of course, the open interest data of Bank Nifty is very unreliable. FIDI data which you see is majority Nifty data. So again, no third source of data. And of course, see if you are one more last meta point. See if you are a trader who's in it for the long run, then risk management is what you have to emphasize on the most. Which means you don't want very volatile events happening often, right? Now the problem with single stocks is that volatile events, gap ups, unexpected 5% moves can happen way more often. But when was the last time you saw Nifty gap up 5% in a day? Very rarely, right? If you're a trader who emphasizes on risk management and steady growth, mostly through option selling, etc., then regardless of how much premium the other stocks offer, you would still want to play in a predictable asset class, right? So think about this way, right? If I go to a casino in Goa, I wouldn't want to play with all these degen tourists because they have no idea what they're doing. They'll just put large bets out of nowhere, and I feel like, boss, what are you even doing? But if you go sit down with a table of professionals, right, you have insane predictability. Nobody does random YOLO stuff, right? I mean, it's very predictable. It's much easier to play a pro than to play a bunch of people who are sitting on a table for the first time. For exactly the same reason, I prefer Nifty because Nifty is extremely predictable. I mean, of course, there are things like COVID, but it's not like one fine morning you wake up and Nifty is up 4%. So because of predictability, the ease of risk management, and the fact that it cannot be rigged by one or two promoters colluding, and the fact that I have multiple sources of data, I hugely prefer Nifty. In fact, every single new beginner who comes to me and asks, what should I do? I say, boss, stick to Nifty, don't do anything else. Because there are too many things which can go wrong against you. Coming to the question of stocks, I don't even know where this is coming from because, uh, first of all, I'm not sure how you will trade US options because uh, the SPX options, right? The lot size is fairly large, if I'm not mistaken. Or am I missing some point here? So that is number one. The second thing is legally, I don't think an Indian resident citizen can see. You can of course invest in a US stock, right? Because that the two and a half lakh dollar limit or something is there. But I don't think you can, as an Indian, legally you can convert INR to USD and speculate on a derivative. So the answer to the question, can I trade on US derivatives? The answer is I don't think it's legal. And see, I don't have a problem with legality, right? Because at the end of the day, like, I mean, it's just a law made by somebody who is just a person like you and me. So I'm not going to get into the ethical side of breaking the law because I'm not the person to comment on that. But the problem with that is, see, if you do something like this, you convert INR to USD, trade derivative, and for some reason it gets stuck there. right? I don't think you have a legal recourse because if you speculate or use derivatives, and please correct me if I'm wrong, you have already broken FEMA, right? This is the Foreign Exchange Management Act. I don't think it's worth it, man. You're already having enough stress trading alone. Why do you want to trade illegally and add to that? I mean, I'll stick to Nifty 9 out of 10. I mean, 10 out of 10 times. So yeah.
There's another question. How big is the entire subscription-based service model in India? Be it Sensibull, be it QuantSat. What people are trying to quantify is how many retail traders are there who are actually trading properly. So how big is the market in Sensibull and QuantSat? All of these in India.
We don't. So again, right? Like, what do you mean by how big? Like in
How many
sense that,
people? A rough idea will do.
okay, so see, the thing is this, right? We have roughly 50K plus paid users at any given point accessing the platform every day. Our annual, sorry, our number of unique users, free paid, everything combined is probably slightly north of 250,000. So I don't think it's a, again, so is it Flipkart big? No. Is it Cred big? No. Is it Meesho big? No. But is it I don't know, something else small? It's not exactly small either. So I would say it's reasonably good enough to build a profitable, sustainable business. I mean, if you do it right, see, at the end of the day, right, you have to provide value to people, and we know so many people who have renewed their subscription every year in Sensible since 2018 when we first started paying. Right, 70% to 80% of our revenues are recurring revenues. We don't get the first time tourist revenues often. So but then is it big or small? I don't know. That depends on your perception of what is big and what is small. But roughly these are the numbers. So it's not a dead market. I mean, if it's a dead market, we wouldn't have been here for 5 years. Yeah.
Right. Um, yeah, the next one is any backlash that Sensible has faced ever since introducing Verified. Any traders or brokers who've come at you?
From gurus, not, but, but not from traders, not from brokers. The exchange, the regulator, the law enforcement agencies have been extremely appreciative of what they've done because they can't go out and ask somebody to build it. So they are kind of happy that we did it. In fact, we consult regulators and exchanges and law enforcement agencies a lot on how to detect, catch fraud, etc. Brokers are extremely happy we did it because no broker can go out alone and do it, right? Because like if let's say ABC broker does it today, all the students will go to XYZ broker tomorrow. So for a broker, it's very difficult to launch a verified, but we could do it because we had all the big brokers onboarded. So if somebody wanted to run, they had nowhere else to run, unless of course they decide to go to a broker which is outside these big names, which I don't think it's a good idea from a business point of view for somebody who's. So we got a lot of backlash from the influencer of influencer Guruji, WhatsApp, Telegram group community. Yes, that is true. A lot of people stopped talking to me, but the at least the quote unquote good guys have been extremely appreciative of it. And I think, see, at some point, right, somebody has to do it in the sense that at the end of the day, what are we all living for? I mean, what are we all fighting for? There should be something that you change in the world and leave it for good. And my hope, of course, is that, see, now Zerodha picked up verified PNL, right? And I know that two more out of the top 5 brokers in India are implementing it. Now, if all the people implement verified PNL, and if so, let me just take a step back. There are a lot of Telegram scams happening across India, right? It's crazy because after verified PNL was launched and we started working with all these agencies to prevent and detect fraud and all that, the kind of stuff I came to know is like another level, right? I mean, like the level of criminality which is embedded in the system is it's astonishing, right? Now, it's impossible for any regulator or a law enforcement agency or an exchange or a broker to catch all this fraud. you probably might be able to catch a few people who are doing, scandalous activities with a Telegram group of 1 lakh people, but there are going to be hundreds of mushrooming small 100 to 500 people Telegram groups which are still scamming, right? And even if somebody scams 10,000 rupees from 500 people, at the end of the day, it is 10,000 rupees from 500 people for those people and also the extra losses they make. So they can't really prevent it, right? The regulators, exchanges, etc. Now, the only way in which I think there is an end game to this is if every broker says that, boss, dekho, we are all going to develop verified by PNL. And every broker is going to say, create awareness among their users saying that, look, we don't know why you need it, but if you, obviously a broker or an exchange or a regulator can't go ahead and tell the broker, listen, we know you're in Telegram groups, so whoever is your Telegram Guruji, please ask him to share verified panel. That, of course, the regulator or exchange can't say because they can only say, please always go with registered analyst, right? But then that is not going to work out. But if all the brokers come together, implement verified panel across all their systems, and they put out a public awareness notice saying that, look, we don't know why you need it, but for any reason, if you want to see the verified panel of this person, please ask him for it because we have developed this system. If that kind of awareness comes in the system, right, then I'm pretty sure if magically today all the brokers implement verified PNL and tomorrow if they make sure that all their clients know about it, I'm willing to bet my bottom dollar that by day after tomorrow, 99 out of 100 Telegram groups will die. Nobody is going to join them, right? Because I've seen this in action. And I think this is what has to happen. I'm hoping that this is what will be the end game of verified by Sensibull. So in that sense, yes, if a backlash happens, I'm okay with it, but I just hope other brokers do it soon.
Oh, there's another question on Zerodha. This is slightly weird. Why is Zerodha the only broker which has OI restrictions on out of the money strikes? There's some theory here that they have their own prop desk. They use the entire OI limit set by the exchange or set by SEBI. And because of this, traders with low capital, they just have to buy options instead of selling spreads or whatever.
I think the question, I think you, okay, so I'll clarify the question. See, basically, the question what they're saying is, so Zerodha is the
Why is Zerodha the only broker?
So the first reason for that is, see, there's a rule which says no broker can have more than 15% of OI in a particular strike in any instrument. Okay, here's a fun story. I, as a person, single person alone has violated that limit in 2011, somewhere in December. Basically, I was trading for IFL and I occupied 18% of USDINR 50 call, 50 strike call back then. And what happens at that point is the exchange gives you a call and asks you to unbind the OI. Right. So basically, there's an exchange restriction which says that no single broker can have more than 15% of OI in a particular strike. Now the problem is Zerodha is by far the largest broker in India. So I in the sense that like nobody truly understands how large they are because I'll give you an interesting statistics, right? The second largest broker in India, most people think, at least going by the number of clients activated according to NSE thing, people think that the second biggest broker in India is as big as Zerodha, right? But here's the interesting stats. The assets under management in Zerodha is 10 times the assets under management of the second biggest broker in India, although number of client wise they are same, right? And this is crazy, right? This is, so nobody truly understands how big and deep Zerodha as a systemic entity is. Now, of course, NSE has a rule. I mean, almost all exchanges in the world has a rule that a single broker cannot have more than X OI of a single strike in an instrument because it's a systemic risk, right? So this is a regulation which SEBI has put in place, NSE has put in place, etc. But because so many people are there on Zerodha, again, when you look back at it, it's not just as many users as the second biggest broker, it's also 10 times their money. So clients in Zerodha who trade options end up exhausting the OI limit very fast, right? Which is why Zerodha is the only broker that has an OI restriction. It's just that they have so many people trading that their 15% limit gets hit pretty soon. In fact, if other brokers were to grow as big as Zerodha in terms of number of clients who seriously trade options with the same kind of money, we will not have. So Why is Zerodha the only broker which has strike restrictions? Because the other brokers, unfortunately, are not as big. And ironically, the largest impediment to the growth of Zerodha is their scale itself. So yeah, this is the reason why they're having. Now, second question about their prop desk. I don't think Zerodha has a prop desk anymore because uh, I think long back they might have had a prop desk when Nikhil was still active in Zerodha, but they have become a AIF Cat 3 now. So to the best of my knowledge, Zerodha doesn't have a prop desk. They have a separate AIF which is what's it called? True Beacon. So I don't think the OI of Zerodha now has anything to do with their prop desk. In fact, back in the days, I think uh, the prop desk used to be mostly option seller. So because they had prop desk selling options, maybe that allowed more people to buy options in Zerodha. But now with the prop desk gone, I think the things have become worse. But in any case, I don't think the prop desk exists now inside Zerodha. It has, I mean, there is now an AIF, and I don't think that has anything to do with prop. I
Yeah,
think
that answers the question. So over the past couple of years, SEBI has released quite a few new rules, right, for margin trading, for risk trading, and supposedly to help retail investors. But don't you think do you think the regulations are right? Are they actually working for us, or is it just pushing people to gamble? And the second part to this, if you were part of SEBI, is there any one rule that you would like implemented, which would benefit market participants?
that's a tough one. The second one is a really tough one. Okay, let
That's
me.
why we have you here.
uh, okay, see, it's a very, very extremely philosophical discourse, but I'll go to the second one anyway, right? But answer to the first one, right? See, a lot of people think that because margins were increased, people cannot trade by selling options anymore, and therefore they are pushed into buying options, and therefore increase of margins has ironically had the effect of making more people buy options as a theory, right? But I really don't think this is correct because if you look at overall data, right, the number of people who have at least 1 lakh or above, right, they are probably less than 20% of the crowd, right? Given this data point, uh, and let's also face that how many people will really want to do this one lot trading. So I don't think there were any more people buying options before regulations as there are after regulations. I don't think more people got pushed into buying options because of the regulations. I think at the end of the day, what people don't realize is this, right? See, and this is the meta, right? Rich people don't want to get rich, right? They want to only preserve and grow their capital. It is the not so rich people that want to get rich, and therein lies the fundamental problem in stock markets, right? Uh, if you have not so rich people trying to get rich, right, and you can't blame them either, right? Because see, if I have only 1 lakh rupee capital, right, and if I am told कि boss 20% बना लोगे छाप दोगे ये like ये boss एक साल में 20,000 रुपए मेरे को नहीं चाहिए because after tax it's only 16,000 rupees 14,000 rupees and hardly 1,200 rupees a month, right? Why do I want to make 1,200 rupees extra a month? That doesn't make sense. I would rather try to gamble that 1 lakh and make it 5 lakh and then do the wealth management game. It's like short stack. I mean, if for those of you who play poker, right? If you're a short stack, then there's only one move you can realistically do, right? There's no point in trying to do the other thing. Try to push all in and try to double up, triple up. And that's logical. You can't say this is gambling behavior. If you're a trader who has less than 50K in capital, there are realistically two things you can do. One is try to trade, grind with the 50K, really become a good trader, then somehow infuse the capital if you have access to that, and then start trying to manage that money. The other option, of course, is if you don't have access to capital, you somehow need to get capital. What else do? You take 25K, gamble it, maybe you will get 1 lakh, try to gamble it again, maybe it will become 5 lakh, now become responsible and try to steadily grow it, right? This is the mentality. Now, regardless of whether SEBI makes the margin 1 lakh, 1.5 lakh, 2 lakh, it doesn't matter, right? People who are option sellers, who are rich people who are trying to preserve their wealth are not going to change their behavior because of this particular thing has happened. Similarly, nobody who was having an account size of 1.5 lakh L. So think about it this way, right? Let's say I have a margin account of 1.5 L. right? And now I could trade one lot option sell before SEBI regulation. Uh, if there was a dude who was doing exactly one lot sell every week with this 1.5 lakh L margin, who after this margin was increased to 2 lakhs could not afford to have this sell margin, right? And therefore became an option buyer. I really want to meet that dude because I don't think that dude exists, right? In fact, even in this given scenario, if margin went up, if this person is really, really, dedicated to make money by selling, etc., buy a deep OTM option to hedge it, right? Your margin reduces to something like 25, 30K. So I don't think regulation has pushed anybody to become a buyer. It sounds like a very intelligible theory, but data would suggest otherwise, number one. Second, coming to if I were, see, I'll tell you one thing which I have realized, right? So this is about um, this bigger meta question is, should state and the regulator be a paternalistic father figure? I mean, if you distill the essence of your question, right, what would you want to do if you are SEBI to protect retail investors? Which is exactly the same question as, keep boss, what are you going to do in the role of state as a paternalistic figure? Now the problem is, a very young me would have said, "Ki boss, ban kar do FNO sabke liye," right? I mean, that's a very new way of looking at it, because if you do that, Dream 11 will emerge, or MPL will emerge, or house betting will emerge, or everybody will start gambling on crypto or something like that, right? Uh, so think about it this way, right? You can ban cigarettes, but there will be a black market for it. You can take a stand that, boss, this is wrong for you. Let's ban XYZ, but there will be other parallel emerging this thing for you. If you say that, boss, so there is of course a great correlation. See, we live in the age of peak capitalism, right? And peak capitalism has a very simple definition. The thing which makes money is money itself. Right? Most people don't understand this definition of capitalism. People think that capitalism means rich control the means of production itself, but that's not the real, essence of capitalism. The essence of capitalism is that if you want to make money, you need money, right? And that holds true in stock markets also. Because if you have a very largely capitalized account, you can trade with much more flexibility. You can trade with peace of mind. You can absorb losses. You can have multiple strategies at your disposal. If you're a small account with very less trading size, then you're a one trick pony. At the max, you can do like probably a buy option, or you can do a single lot spread, right? So then you can say that, look, realistically, only rich people have a shot at stock markets, and therefore ban everybody who's trading below a certain income threshold, right? Again, that's a kind of myopic way of looking at it, because let's draw another parallel, right? Look at JE. Only 1% of the people qualify JE. So am I going to go to a dude who has 70% marks in 12th and say, "Beta, देखो तुमसे ना हो पाएगा, ये सब मत करो, कुछ और कर." That's fundamentally against the concept of freedom, right? Because a person does not have the odds to succeed at something, if you make him ineligible to try, I'm pretty sure there will be a lot of backlash against it, right? And it might also be wrong, because see, at the end of the day, hundreds of people try becoming good at something. Even if you look at cricket as a career, right? 11 people make it to the Indian cricket team. Maybe 100 people go to various IPL franchises. That doesn't mean that if I find a kid in Kozhikode who doesn't look like he'll have an Indian team or IPL shot, I tell him, "Oh, beta, dekho, try karna chhod do tumse na." So that kind of a retail protective measure regulation which excludes people, or does not make F&O available to people, or put restrictions in terms of, because I'm saying this particular example because all the efforts by regulators all over the world has been a hint at saying that only people with a certain net worth can participate in F&O. But I don't think that will fly, simply because it kind of goes against the principle that even though it doesn't look like I won't make it, you can't deny me the chance to try. And the second thing, of course, is that if you ban something, something else will flourish in grey market, right? I mean, think about it, right? All the hard drugs are banned in India. Try explaining that to a school kid in Bombay in 9th standard. He'll show you stuff out of his pocket. So, as a regulator, I don't have any absolute powers to control F&O or make these things better for retail investors, right? And ironically, if you ask me what's the only shot at it, I think we have to let people make their mistakes and learn from it. I really can't think of a way in which we can do something, introduce a regulation which will save retail. Maybe verified, at least you can prevent scammers. Maybe you can ask all the brokers to implement verified. And at least that will kill one big source of retail scamming, which is all this Telegram-based tips industry. So yeah, I think after all the long-winded answers, I'll settle down on verified P&L by all brokers compulsory. That is one regulation I'll try. I don't know why I didn't think of
Awesome.
it.
Perfect. Just one final question from our end.
Yep.
We can see Sebastian Vettel's car in the background.
My
Are you a
wife
Ferrari
gifted me.
fan?
I'm a
And
Vettel fan.
if
But my wife gifted it to me.
so, are you a Ferrari fan or just Vettel?
See, the problem is this, right? If you go back in history, probably from the 50s or something, it's very difficult not to be a Ferrari fan. But if you look at the kind of strategies stuff they've,
That was my next question. How is your mental health?
if you look at all the strategy they've done in the last, my God, it was painful to watch 2016, 17, 18, 19, 20. I don't think they ever got that act together. So yeah, I'm not a fan of. I'm a fan of their legacy, but I think they're batshit crazy when it comes to making decisions.
I think their strategy here should be promoted, and they've been really kind to Leclerc too. All right, Abid, thank you so much for taking over an hour with us.
Not a problem.
And yeah, if you have any closing statements, please.
Actually, no closing statements. If there's any question which I haven't addressed, I mean, seems my question is unanswered. Somebody is 1 second. I'll just see the AMA channel to see if there's something.
Sure.
If you can see a question which I think is interesting enough, I'll be very happy to answer that.
अब सबको पता लग गया ना कि इस चैनल पे आ गए तो फिर अब सारे BA questions आएंगे casino stories चाहिए लोगों को okay this one's a decent one is
Yeah.
it better to compare USD INR with DXY for analysis because the movement is similar do you think there's some kind of a tangent between the two
So this is a very good question. My answer is this, right? If you're a pure technical analysis person, and I kind of am, very biased towards that. Point number one is that you should always look at the chart of whatever you are trading to make decisions on what you are trading. So, for example, you can't be a trader who trades Nifty and then makes S&P 500 ka chart the analysis for their trades. But in case of USD INR, DXY has a significant correlation on it. The USD INR's, DXY has an extreme correlation and an impact on how INR moves. So yes, I would give some weightage to my analysis to on the DXY chart to figure out where INR is going, but that still won't be my primary point of view. Or let me put it this way, right? If I am seeing a clear chart pattern on USD INR, I'll trade that chart pattern. I'll use DXY probably as a confirmation. If I don't see a clear chart pattern on USD INR, then I won't make DXY the reason to initiate a new trade. Let's say I am in a trade right now and USD INR chart is not very clear where it goes. And let's say I'm short the dollar or something, short USD INR, right? And if DXY says that there's going to be upward breakout of DXY, which I don't see in INR charts, then purely based on doubt, okay, DXY looks like it is going to fly, and I don't know what is happening in USD INR, I'll get out of an existing trade based on USD. So yeah, I'll use DXY as a weightage on my USD INR, and I'll also use it whenever I'm in doubt to get out of a trade. But I won't start a new trade based on DXY alone if I'm not getting a clear signal from INR charts.
awesome there are a few more questions on AMA you
Okay.
can just take a look at them
You can let me know. It's a very big scroll. Sorry.
yeah
So somebody is asking, what's the best institute or person you suggest learning algo, Python? See, it's one thing to learn coding, it's another thing to develop algo. If people are telling you that they will teach algo, probably it's not a good idea, but try to learn. And here's the other thing, right? I mean, this is where my fundamental disconnect lies. See, what YouTube and Khan Academies and MOOCs and Coursera's and Udemy's of the world have done is that you can learn from the best guy in the world for free, and you can learn fundamentals, right? All the things which courses are being sold by different institutes, they're basically derived from the fundamentals. If you, I mean, if you want to become good at something, you should learn the absolute bottom fundamentals. You can't learn a layer and expect to be good at something, right? In the sense that if you want to be good at advanced mathematics, there's no way you're going to pull it off without being really good at algebra, for example, right? And all the absolute essential fundamentals are being taught in a really good way for free by the best teachers you can learn from on the internet. Given this state, I find it very hard to go pay money to somebody who's probably deriving something from there and teaching it, right? So I'm not a fan. Like, I've never found a paid course which is giving a value which is not given by one of the free courses already.
Oh, Abid, a really important question.
Yeah.
What about books? There are so many books on trading, including psychology, technical analysis, macroeconomics. Are there any few books that you would recommend that every trader or investor should read?
So I would only say, so here's the thing, right? When it comes to investing, um, the best strategy is to not know anything and just keep buying SIP or Nifty, right? I mean, if every single time we have hundreds of traders ka evidence that nobody beats the index. So if your pure purpose in life is to create wealth through investing, do yourself a favor, save a lot of time, don't learn macroeconomics, don't read a book, don't listen to TV, don't read newspapers, cut out yourself from all the economic noise. Index SIP for 30 years, probably your kids will drive a silver colored M5 and thank your dad, etc. etc. But if your objective is trading, I would say one and only one book. I mean, this is the only book on trading that I have or I've ever read. That is Steve Nielsen Candlestick Analysis, Japanese Candlestick Analysis. It's a original OG base book. I mean, Steve Nielsen is to candlesticks what probably Looney is to trigonometry, or you know. Please read that book if you can. That's the only book in trading I own. Technical analysis, there are plenty of YouTube sources, and Zerona Varsity is a great source of technical analysis. Investing.com has a lot of has a very big chapter on technical analysis. Technical analysis you can learn from anywhere. Steve Nissen's books is extremely good to pick up candlestick analysis, but unless you really want to, do some intellectual adventure, if your only aim is investing, it doesn't make sense to read books. Just put SIP, don't bother gaining knowledge. I mean, honestly, no point.
Awesome, awesome. Just looking through. Um, is there any? Are you guys think of implementing a pause feature on Sensibull subscriptions? Because loads of traders nowadays they do take breaks. So this is what people are asking.
So we haven't had enough feature requests for that, because, or let me put it this way, right? This is the first time I'm hearing it, and I generally tune into a lot of almost all the customer tickets we get on our support channel. But every time when somebody requests us on an email saying that I'm taking a break for 1 month, we do it one off, but we don't have it as a feature on Sensibull. But every time we get a request saying that I'm taking a break, can you like pause it for 2 months? We do it over email manually, but we don't have a button for that. But we are very happy to do it if you want it.
Yeah, okay, that's perfect, man. How significant is AI and machine learning in today's trading? Does AI even play a role? Because there are loads of ChatGPT Telegram groups which are telling you all of this, that we are using ChatGPT and then we're trading. So just join in on the trades and you'll make money.
Okay, so two separate points. One, I don't know about AI enough to comment on that. right? Because I'm pretty sure those who have figured out how to do deep learning or something to. I mean, I know a lot of US based HFTs who have poured in like billions of dollars into deep learning, etc. Uh, but I haven't seen it in my real life, so I'm not going to comment on that. But what I do know is that every single person who tells you that, okay, chat GPT based XYZ, it doesn't matter what it is. Chat GPT based customer support, chat GPT based trading, chat GPT based dating advice, chat GPT based, insert anything there. I really think you should take it with a pinch of salt because yeah, at least the ones we have evaluated, right? Because we got a lot of business proposals saying that, hello, we have automated support using ChatGPT. When we evaluate it, it turns out to be like a gimmick, right? So, if you think somebody is coming to you saying that we have ChatGPT based AI Telegram channel where you'll get trades, I'm not going to buy that.
Yeah. Abid, I think that's all. We've covered most of the questions so far. They're just being repeated now.
Okay.
Yeah.
So I think, yeah.
Yeah. Thank you so much for your time,
No
man.
worries
Thank you
about
so
that.
much.
Good fun. Thank you all for listening
Hopefully
to
we can. Hopefully we can have you back soon. And there's the stupid joke that these guys want me to say as a closing remark.
which is
We bid you goodbye. Abid, I bid you good.
no, people made an offer, so that joke is like 10 years old.
Oh God, we thought we were the first. Yeah, typical trader mentality, no?
Yeah, yeah.
All right, man. Thank you. Hopefully, we can do this again
And also,
soon.
thank
Maybe
you,
on the
right?
Reddit.
Because people on this channel have taken out 90 minutes out of their lives on a Friday evening to come and watch this. So thank you all for tuning in. It's really good fun doing this. Thanks for the thanks for the opportunity.
Thank you, man. Hopefully, we see you soon.
See you. Bye.
Bye bye.